Heidi ho, everyone, and welcome. Look, I'm so sorry. I'm having a technical brain fart. No, it's just a technical stuff up. Let's call it what it is. Welcome aboard. It's nice to have you here for the new, if you like. It is the new Trading Buddies. New because we have a new time, which of course, start my video. I tried to do that, and I did do that. Are we there? Hello. Oh, I'm in paradise. I should be in Trading Buddies, but I'm in paradise. Okay, whatever. I'll change that down the track. Sorry for the false starts. And as I say, welcome to a brand new version, if you like, of Trading Buddies. It is a bit new. I'll catch up with that in just a tick, but we need to go straight away to the pound US dollar to see if we're going to trade the breakout today. And the answer is a very, very simple NO. And the reason is, wow, I've got some weird stuff going on here. You got my pound charts, guys, my pound US dollar chart on the hourly. I've got some weird stuff going on. My computer rebooted and I've lost everything. So chat's telling me, yep. Thanks, John. Hi, Paul P. How are we doing? Righto, answer is no. And the reason is because, well, we've had a breakout here on Friday, and now we've had another breakout already today. And that looks to be with the momentum, which of course is now down, in my humble opinion, that will last some time. Trying to trade that at the moment with a gap in the market, which is almost closed. I would not be thinking trading right now. Weekly pivot and daily pivot very close together. I'd be thinking, okay, let's see if we can get a bounce off that level. That would make sense to me. But at this point in time, nothing else is really attractive to me. Now, in terms of the breakout, as I said, can't see any value in placing a long order there and a stop loss here and a short entry there and a stop loss way up there. Reason being, as I said before, we've already broken out and we now need to find out where that can go to before it consolidates and pushes us back. I would imagine if you were going long above that bar, which is exactly what you would need to do, that you would be in horrible trouble once you got to that resistance level. Could be wrong, of course, and if we are, if you like, in a rectangular box and the bottom of that channel or the bottom of that rectangle isn't far away either. So, hello, Lewis. That was a short cruise. You spot on, Paul P. I told you there'd be a way you could tune in when you're on the high seas, as I appear to be. Well, I'm on the beach somewhere. Don't know where. Fiji, maybe. So pound is not for me right now. But on the smaller time frames, I've got to say, and this is going to be a bit of a theme with me against with the dollar pairs, I see untested daily and weekly pivots magnetic to the market when that happens. Potential bounce off the monthly, I see this as a possibility. Trading that against momentum, against my bias, is a difficult prospect, however. So let's just wait and see how that pans out in terms of a setup. If it does, I will consider it, but it will be very, very small risk that I do take into that particular scenario. Righto, look, I've got news, and the news is, of course, that this being a new show, because it is change of season, if you like, in the UK, because daylight saving has ended, which means, and you know that because you're in the room now, we have a later start, and we also have a different format. Format is, as always, very loose, of course, but we are going to be joined on Mondays by Ainsley, and we are going to be joined on Mondays by George. So it's going to be a pretty quick show in terms of different things happening all the time. I will, as always, do my pound breakout if that's going to be a possibility. Then I'll go through on Mondays what I'm looking for the week. And by that time, Ash will be in. He'll do pretty much the same. And by that time, it'll be time for Ainsley to pop in. She'll do pretty much the same. And then by that time, it'll be time for George to pop in and give us exactly what he's looking for. And by the end of George, we should be getting towards the top of the hour. And we will then, of course, have a little chit chat, see if there's any questions that we need to go through, any charts that you want looked at. Same as always, if you've got your opinions, please let us know. And feel free to join in the chat at any stage. You can come on, Mike, and tell us what you're thinking or ask us what we're thinking. That's all very good. And in particular with our guests, George and Ainsley, please feel free to quiz them as well. All right, so no pound breakout trade. There are or were 3 weekly game changer bars, and we're going to have a look at those now, unless Ash has joined me. G'day, buddy.
Hello, mate. How are you?
Yeah, I'm good. Oh, you've got a voice.
I've got a voice, yeah. My all weekend, it felt like I was swallowing glass, but it's actually getting a little bit better today. Not quite as bad.
Cool. It sounds much better, I've got to say.
Yeah.
And you've had a sleep?
Yeah. I mean, I was up 1 o'clock every morning, working right through to 11 in the morning, and then managed to get a couple of hours. So it's really strange when you kind of flip your sleep pattern over. But I think because it's only 3 days, it doesn't mess with it too much. So I did manage to get a relatively early night last night and woke up. So yeah, I don't feel too rough at this stage, mate. I feel all right. It's the key is sleep, isn't it? If you can sleep, you're fine. You can recover fast. And so far I've been able to. So yeah, I think when you mess with your sleep pattern, it can take a little while to get back into it. But I seem to have sloped into it quite easily.
Awesome. Know why, mate. Well done. Good job. So you haven't got a trade pending?
Well, let me show. Well, unless you've still got stuff to go, but let me show you what we have got.
Well, I haven't started yet.
You haven't even started. Okay. Okay. So okay. Does that mean that
I haven't got a trade pending? So you go.
Okay. All right. Well, let's talk through these charts because I think there's a dangerous, if you like, there's a potential dangerous short on if you want it. I don't think I'll participate. I mean, I'm to be honest, because of the weekend, and I know that I am a little bit, getting back into sleep patterns. I just don't recognise that I'm probably going to be in the quite the right state to be trading and making the right decisions. I might do, but I prefer to wait. I've got no rush. It's the 1st of November, plenty of time to make money for the month. But let me show you what we do have, because I think it could be interesting. Yeah, I want to do that, and I want to do that, and I want to do that, and you should get that. Okay, so I don't want that though. Oh, what have you done now? Forget that. Right, so
it must be Monday-itis.
Yeah, exactly.
I struggle to get in the room. It's all good.
So this is the FTSE. Now I'm looking at the FTSE on the monthly because I think that we're starting to get to those kind of levels where you have to kind of go to the top timeframes and say, are we approaching major support and resistance? And on the FTSE, we're getting close. We're about maybe a 1.5% away. But when you draw this level right from the top down to here, it suggests that we're edging ever closer to that point. And as I say, that's around about 1.5% gain on the FTSE. And I think we will get there. Question of whether we get there today, I think is the jury's out for me. And the reason for that is because of this. Now, I'd like to know, what people do know about expectations here. But let's have a look at this, because I was doing some analysis on the currencies last night. So I've just got a couple selected, but let's select them all. Oops. And I was doing business surveys. So let me just check everything, because what we are after checking is this and this and then this. So that basically says to me The most significant aspect of the week, and possibly the most significant aspect of the year so far, is the Fed this Wednesday.
It's a massive week.
It's massive, mate. And this is the thing. When you look at the FTSE, massive move to the upside, you know, and right across the board, you look at the FTSE, you look at the NASDAQ. I mean, the NASDAQ is just crazy. The way the NASDAQ ended last month was unbelievable, in my opinion. S&P, same thing, an unbelievable end to the week. Dow Jones Industrials, unbelievable end to the month, sorry. You know, as we approached it, really was the last couple of days, it just started to take off. And if you put this in context of where we were in September, you know, towards the end of September, it was a pretty crazy month for these US equities. Now, because of that, and because we've got such a huge statement coming, now, as I say, I don't know what people know. Maybe people know what, you know, that's something that I'm not aware of. But to my knowledge right now, there will be some genuine anticipation of what the Fed are going to do this time. You know, genuine confusion about what the Fed are going to do this time. There was an announcement last month, I think, about talking about tapering in November, and here we are. You know, this is why I think this could be the most significant Fed statement to date for the year. Now, do they taper? Do they talk about interest rate rises, which is the other thing? They won't raise interest rates. I think we can be fairly certain on that. They won't be raising interest rates, but what they might be doing is saying we are looking to do 3 next year, or 2 next year, or 1 next year, and that revalues equities. So because that's going to revalue equities, then I look at this and I say this is at a high. This is potentially not necessarily a turning point, though it could be, but most significantly, it's unlikely, in my opinion, to go through this before Wednesday is done. You know, it's got to get past Wednesday. So for that reason, when I look at the Dow, I say this is if you like, is a dangerous short, and I say it's a dangerous short because the market's so hot. But the long, in my opinion, is even more dangerous. So that kind of suggests, do we want to trade before Wednesday? Well, yeah, of course we do if we get an opportunity, and if we get a clear signal. Will we get it? I don't know. So you're looking at the Dow, and as I say, I think we're looking at the Dow and we're saying this is probably a neckline. This is probably the inverted head and shoulders level here. There's a left shoulder. Oops, change that to white. There's the left shoulder there. This is probably going to be forming the right shoulder, and there, look, that looks like the head there. So, you know, that would suggest that if this is the left shoulder, the right shoulder forming, then this would come back a little bit, you know, maybe even down to this this horizontal level here again. I don't know, but it would suggest that technically we are overdone. We're overcooked at this particular point. But then when you couple in the fact that we've got a significant announcement coming in a couple of days, that would say to me that today is not the day to be buying the Dow. Do you have any signs and signals that you can go short yet? No, you don't. You know, it's still relatively bullish up here. We got no 4-hourly trend line broken. We got no hourly trend line broken. Let me just tidy that up. So that would say until that happens, then we're probably going to be waiting where we are. And even then, you wonder whether the market will just say, we're going up. You know, Amazon, I think it was Amazon, correct me if I'm wrong, Apple missed because of supply chain issues. Amazon missed because of supply chain issues. The likes of Tesla did great, obviously. The likes of Microsoft did great. So software is kind of is doing well in the NASDAQ and the S&P. So it seems to me that no matter what the news is, the market right now is going, let's just focus on the good stuff and ignore anything else, because you know, we haven't had that enormous pullback that we've been expecting and we've been anticipating. We know the market can stay irrational longer than we can stay solvent. So we know that, you know, we don't gamble on that stuff. But by the same token, when we're at these highs here and we've got such an important announcement coming, it doesn't suggest we should be implementing any more long trades. Let's have a look at the S&P and see whether that's looking a bit toppy as well. Well, look at the S&P on the dailies. Then it suggests that if we were to follow the levels going up, follow the upper line going up, that may well have some more room, you know, depending on where you draw it. NASDAQ, the same. It would suggest that it's probably got a little bit more room to move even higher. But you know, back to the FTSE, it suggests that there's a little bit more room, but maybe not that much. So it does depend on what you choose to trade. But so far, I don't feel too much. I'm not too comfortable about calling what to do. I would prefer to see this come back and then implement a trade long. You know, I think the long is looking likely. Numbers across the board have been pretty good. I don't know if you saw Chinese numbers overnight, but they were atrocious, you know. So
No,
again,
I didn't, mate.
well, they were terrible, you know. But PMIs in China are suggesting are suggesting a slowdown. And again, the market
Oh, I
seems
like
to be
that.
more focused. What's that, sorry?
I like that because I'm an Aussie bear this week.
You're an Aussie bear this week, okay?
Only for a week. Only for a
Only
week.
for a week, okay. Well, okay. All right, mate. Well, I'm gonna bring you something later on, just to kind of give you
Chocolate cake.
just a different perspective. Just can I ask you why you're a bear? Is it purely
Why
technical?
Well, really, I should have said I'm an Aussie dollar bear because really I'm a dollar bull, and
Yes.
I rarely say that.
Yeah, I know what you mean. Yeah, well, this is again going to be down to the FOMC, because obviously if the dollar starts to
and the RBA's tomorrow as well. So it could be a massive week.
So yeah, so we got some big uns coming. I'm just going to show you something before I pass it back to you about both the Aussie and the Kiwi. Now, this is only one piece of information, but I wonder whether it might be enough to kind of keep you out of the trade or not. So I'm just gonna show you.
I'm happy to be kept out. That's
okay.
Good for me.
All right. Well, let me show you this because I was looking at this last night, and it surprised me. It surprised me. And now that obviously we are looking at if I can get this loaded up.
I got to say, I was listening to the Treasurer this morning, and he's riding high. So the sentiment in Australia at the moment is absolutely robust.
Yeah, it is, and as are the numbers. You know, I did some fundamental analysis yesterday on Australia, and the ones that came out on top were Australia and the United States. So so both of them have got numbers of interest. But look at this.
Makes it tough to trade Aussie dollar, doesn't it?
Yeah, I think it does. I think it does, mate. Look at this on the seasonals. Aussie dollar, the first week in November, bang. I mean, that is relatively significant when you look at the other moves. Okay, yes, we had the same sort of thing here, but this is a very, very steep move. So it tends to, over the course of the last 33 years, it tends to have a pretty good rally in the first week of the month. Mm-hmm. You compare that to the dollar. Also, you know, okay, it's a bit choppy the first week, but then it also starts to move to the upside. So I don't think that it's giving you that much clarity, but I wonder whether that might be enough to say the lack of clarity kind of like, you know, gives me a bit more caution about the trade. The other thing I thought was quite interesting here is the US Treasury note, the 10-year. Because what we've seen is bond yields, and I'm really sorry about yesterday's video, mate. But this is the stuff I was gonna. I'd actually.
It's nice music, though.
It was. It wasn't my music. It was through the event. So we got the 10-year Treasury note here. 75% of COP participants are saying that, you know, the index over 3 years is 75%. 80% and above is significant. So it's not quite there, but over the 18 months is at 100. And over the 6 month, it's at 100 as well. Now, the 10-year Treasury note. Now, if we bring in the buyers and the sellers here and see what's been going on, there's the index there. That's the view of the index. Let's take these net aways. Take this. That takes the net away. Look where they start buying here. And you know, there's when you see the index do this, what I want to know is it because there's lots of buyers, or is it because the sellers are starting to increase? But in this situation, it's both. The buyers have come in and the sellers have come in. So sorry, the sellers have reduced their positions. So the bears are coming out and the bulls are coming in. Now, the reason I think this is significant is what we've seen recently is gold really struggle. And one of the reasons that gold has struggled is because one of the reasons, not the only reason, but one of the reasons is because the treasury yield has been so hot. Now, if people are buying bonds, the yield comes down. So does that give us an indication that we are ready for gold to pop to the upside? It's possible. You know, you look at this with gold as well. If we bring this in here, where are you? Here you go, gold here, and on the seasonals. And Ainsley, no doubt, will be talking about this too. Look at this around about the oh, there she is. Look, yeah. I mean, it's worth bringing you in here, unless we're completely hijacking Jeff's section.
It's okay. I can wait till later to talk. I'm on weekly chart, so it doesn't matter.
But look at this now. Gold. I don't like this on the weighted average that it tends to come right down up until the middle of December. But over historical timeframes, we got around about the third week, it starts to pop up. Does that line up with more 10-year Treasury notes being bought, pushing the yield down and pushing gold up? I mean, it's a question. It's not rhetorical. It's a genuine question. Is that the kind of signal you'd look at and go, okay, that's pretty good actually. That looks pretty good for gold.
I think I've been saying I'm waiting for the end of November.
Right. Okay.
What we will do.
Yeah.
But yeah, that's when it's chopping. I mean, pull up a gold chart. It's just chopping around like a dog.
Oh, it was horrible. It's been hideous, isn't it?
I keep referring to gold being trading like a dog, and my poor dog just looks at me and is just like, thanks.
Yeah.
But we expect it. And it was a couple of years ago where we were expecting it for a really severe pullback. We're waiting for that pullback to happen in November. And I sound like a broken down record every Sunday night, but it just didn't happen. And what it did, it just consolidated. And what it's doing here at the moment, it's consolidating. So down there on a daily, it's even worse on a 4-hourly, and it's just hanging there. So if over the next, unless you see something, yeah, look at that. I mean, you get whiplash trying to trade that, don't you?
Yeah,
you go in one direction and then bang, straight back down in the other, and that's just what it's doing. So it is typical for this time of the year. Believe it or not, we are starting to see some kind of correlation to seasonality. And I'll use that term loosely because we haven't seen it for the rest of the year, but it's not doing anything. But quite rightly, it's the treasury bonds that are they're quite hot. More people that will pile into that, bring the price down. And gold is an inflationary hedge. Yeah, I mean, so many times, if that was the case, it wouldn't be sitting where it is at the moment, would it?
No, but I suppose it's maybe there's that's something that's always said, isn't it? But I guess there are other factors that have to come into play when we're thinking about gold. I
think we're in a different time as well. I don't think the dollar's got anywhere near as much credence as it once did.
I don't think so either.
No, but what a pop! What a pop on the dollar. I mean, obviously we need to bring up the dollar, but look at that pop.
Yep.
Is this anticipation that we get some significant action from the Fed? I guess it is.
They're talking about tapering this month.
Yeah.
Because this month is November, which makes it December. It's Christmas next month. Can you get your head around that? I cannot. Let me tell you.
No.
Yeah, this year's gone.
It's rude, isn't it? I'm just very excited that our borders have opened today. Yes.
Yeah.
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 I think we've seen the factoring in of Fed positivity in terms of interest rate rises in the last month or so, mate. That's why we're up here, I think, at the moment. What that move on Friday is, I've got no idea, but I think we're up. Yeah, totally. But I think there's more in it, Ainsley. I think they will go once, not the Fed. I think once the momentum starts, that there's no stopping it till it hits a big resistance level, I don't think. And that's why
the only thing I'm thinking about there that will lead into my other little favorite friend is oil and the cost of oil, which is putting a lot of pressure on consumer prices and all that kind of stuff. So Russia has very kindly offered to open a couple of the gas pipes, which will take a little bit of, pardon the pun, heat out of the natural gas prices and pull that down a little bit. But, heading into winter, this is always, no, Gary, I am not off to Melbourne Cup. Sorry, I just saw that. Melbourne Cup incentivise is looking good, but Melbourne Cup, I've done my fair share of Melbourne Cups. I'll wait for the RBA interest rate at 2.30. So anyway,
those poor horses got to run 2 miles.
Yeah,
it's not fair.
Look, having won quite a lot of money because I like colour of the jockey silk on one occasion, I thought I'd quit while I was ahead. It was turquoise, by the way. It was Rogan Josh, and it was going back to the 90s. But anyway, we'll move along. But oil it's been consolidating for the last couple of weeks, and there's a lot of fundamentals around that with a lot of argy-bargy. There's a lot of stuff going behind. There's pressure on the OPEC to increase their supply in order to get the prices down a bit. But you know what's coming. I mean, it's the beginning of November. I just said it's Christmas next month. Northern Hemisphere winter, the electricity grid in the US, $150 billion to upgrade. It was just some crazy number, and they've got outages all over the place. That's not a good start going into winter. Is it? Really? No. Electricity, all their energy supplies are screwed. So
that on oil, and I don't know if that is likely to play out, but there's definitely a bit of a reversal potentially going on here. Looks like the neckline's down there, so around about the 80.50 looks like it could be achievable down here.
I don't know what you just did to me there. Here he goes.
That looked like I looked at it this morning. I thought actually it is a break of this trend line here, and we potentially do have that lower high. And we've got a distribution pattern, so there's this is a lower high potentially. If here we go, these are the highs, and that is a lower low. So do we come down again? And it does look like it technically to me that we come down a bit.
High low there as well. Got a high low bounce.
Yeah, you do potentially. I'd agree with that.
Don't ignore that. Yeah, come on.
No, I'd agree.
Straight line across at the bottom of that circle.
That's the only thing is this line. I mean that line would suggest this direction to me rather than that. It's starting to look pretty cool, isn't it?
Did you grow up with Mr. Squiggle at all?
Actually looks like Star Wars to me, but
yeah.
And that, that's the thing. We technical analysts tend to come up with completely different charts at times.
We do.
And how we ever get to the same point is beyond me, but we do.
Well, this is the thing, though, isn't it, mate? I mean, the technicals can say what they want, but ultimately we still need the driver. And at this stage, I don't know what the driver to bring oil down is. It doesn't appear to be that significant.
I was going to say, let's hop back to we're talking technicals, and that was all very pretty. Come back to the fundamentals. Yeah. What are the fundamentals? Supply and demand. Where's demand? Demand's right up here. Where's supply? It's being really well controlled by OPEC and OPEC countries. Yeah. You got little Vlad saying, "Oh, I'll let you have one little pipe open." I mean, come on. I mean, what do you think it's going to do to it? It's not about to crash. It's not about to go. They're never going to let it go back down to zero again.
Yeah. I agree, and actually the thing with it, isn't it, is that you could wait a long time for the fundamentals to line up with your technicals, but if they're not there, they're not there. It's just it's going to potentially.
I'll bet they said once upon a time in oil barren land that we'll never let it go to zero, but it did, and now we're saying it'll never happen again. We can't.
But
it's a tough call.
It went there, and there was a lot of you could see it happening. And I remember commenting in my commentary, it was like, there's a lot of chest beating here, and there's a lot of egos, and you're not going to tell me what to do, and the boys aren't playing nicely in the sandpit, and they weren't. And at that stage, Jeff, Europe and the rest of the world were clueless with what was happening with COVID and the implications and logistics and what it was doing on manufacturing. Like, it was an Asian problem. Or Australasia, Southeast Asia, and then it hit them, and it all came tumbling down like a pack of a house of cards, and they were screwed. And that's what happened. But I think they're a little bit more sensitive to these kind of issues now.
Totally. But one thing I've learned in trading for 15 years is that never say never.
Yeah.
Because things change. And if tomorrow, and it's not going to happen tomorrow, suddenly we discover that we can actually capture the sun and store it like we can store oil or like we can store anything else that we can store, then suddenly oil doesn't look as attractive as it used to.
Oh,
and
no, that'll never happen.
That's going to take a long, long time. There's no question.
Exactly. It will happen, but it won't happen overnight, as they said in the Pantene ad. But you're right. You never say never. But as things are moving out of into the greener energy area, and look out Glasgow next week, and hey, aren't we lucky we've got ScoMo representing us?
Yay. We're in trouble.
Yeah, he read do you know what made the Sydney Morning Herald on Saturday, Ash? And this is beyond embarrassing, because we have obviously a fairly hefty coal industry.
Is that still a broadsheet, by the way?
I don't know. No, it's not a broadsheet. You'd have to go down to the newsagent to have a look at that, but I do it online,
Totally.
But I don't have to get on my pajamas to read. I've got my coffee. But it was somebody, he's changed his mind on global warming because Bill Gates gave him a book, and there are pictures where he's highlighted or underlined important passages, and I'm just like, you've got to be kidding me. I mean, the lack of credibility. I read it in a book. I know all about climate change and global warming, and it's just, this guy's gone to represent Australia. I mean, well, he is the Prime Minister of Australia, but God help us, right?
Sorry.
Yeah.
Yes, indeed.
Yeah, so solar power is not going to happen in a big hurry here. Coal is still getting tax-funded dollars by the billion-dollar bucket loads, by the way. So, yeah.
Copying a bit of a hiding in mainstream press and under pressure, but it will withstand that for quite some time, I'm sure.
Yeah. Yes. Now, I probably hijacked your session there, Jeff, but
That's okay. I can stay here as long as needs
Yeah,
be.
appreciate that. Eh?
And you need to go and spend some time with your daughters.
Yeah, we had a 15th birthday here on Friday night, and Friday was, as you know, of another planet, Ash. So, yeah, we're just coming out of. Did you see the final numbers, by the way? We
No.
look really good. Look really good. Yeah, we ended up with 11 platinum. So.
Okay, when we'll take this off air.
yeah. But we've got some really. What I'm saying is we've got some really great students coming on board. So
coming through. Great. Awesome.
Yeah. So really excited. We've got about 33 new students coming through, and that'll be great for you guys as well. So fantastic.
You better warn them about. You better warn them about us.
Well, they've been introduced to Ash.
Yeah, so, they know me. Yeah.
Yeah. So yeah.
There you go. All the bad bits are over then. Excellent.
It's only up from here.
They met you by video too, so this is good.
Oh, did they? In my bamboo patch?
In your bamboo patch, with your beard being very furry.
Well, it was winter probably.
That'll be the reason.
Just having a look at Lewis's question here. Do you mean here, Lewis?
And he's back to Mr. Squiggle. I'm going to love and leave you guys. And
all right, mate.
Okay. Thanks,
Catch
you later. Bye.
Catch you next week. Bye.
Thanks. Bye-bye. Yeah, is that what you mean? Yeah, great. Yeah, that's a good point, actually. Possibly this is that could be a false break, which does lead us here, doesn't it? I think I would probably trust this one just because of what's going on at this stage. And it's cleaner. It's a bit cleaner. I think this one could be, because I've got 2 touches here and I've got 2 touches here. So I've got 1, 2, and that, we don't know what's going on here just yet. So that one's not confirmed. And if I go here, I've got 1, 2. So I think we got there's nothing to suggest that this is the touch, but there's enough to suggest this is because it's the all-time high. So I'd say that personally. Go on, mate. You've got your thing. I'll tell you what I would lastly say.
Go on.
The last thing I'll say is that this is, that there are still kind of technical things here which suggest that there could still be trouble. I mean, and we'd need the driver, but that could still be in play. The FTSE ultimately is still bearish. You've still got this lower low here on the monthly, that is. You got this lower low here. I suppose this, you could say that there's some higher lows here or whatever else, but that's pretty parabolic and it could still fail here and be technically intact. So the chart hasn't actually switched on the FTSE just yet. I think it probably will do because it's a bit of a laggard. You see the S&P, the Dow, and the Nasdaq all-time highs, and the FTSE's still got quite a bit of work to do to get there. So I think it probably does get there eventually.
A laggard.
Yeah,
that's a word I haven't heard for many years. That's kind of it is old English, really, isn't it? It's kind of pirate ships and all that sort of stuff. Yeah, laggard. Okay, that's enough of my humour, or otherwise. You good to go, mate? Should I go?
Good to go. Yeah, let's see what you got.
Righto. We got George coming in 7 minutes. I reckon I could whip through this in 7 minutes, no problem. Righto, we're going to start with EuroCAD. And the reason we're going to start with EuroCAD is because I think we're in phase 2 of a 3-phase run down to this level here, which is what, 138.70. That's how I see this panning out. This level that we're at currently looks to have broken to me, which is 143.50-ish. But of course, it is difficult to gauge where that level is. It's definitely a cloud of a price, as you can see by all the tails at this level. So it's pretty hard to say whether that level is clear or otherwise. But I think a retest this week, I'm on the monthly chart, sorry, a retest of that level this week looks to be on the card. May not even be this week. It could take quite some time to get back to here. Now, I'm considering, and if I look at that, actually, I did do a time on this because we're in this short and have been since January, remember? Here is my get out. And it's that's telling me the 31st of December, which is interesting. I said Christmas time. I don't know if I've got the kahunas to stay in at this lot, to stay without moving my stop loss a little bit closer. And I think above last month bar should be sufficient. That'll lock in another 400 pips. So that's my consideration at the moment. But that's not why I'm on this chart. The reason I'm on this chart is we got a weekly game changer bar. And there it is. Now, I can't just jump in at the absolute lows here. That doesn't make sense to me. Sorry, I've gone the wrong way there. Because we are still, as I said, at this cloud of a price, and I'm just not convinced that we're clear of it yet. So tough for me to be jumping in here on that candle, that's for sure. But what it actually does for me is it gives me a general consensus that the market will go that way by the end of the week. So all I need to look for really is a pullback and sell the rallies. And that's exactly what I'll be looking to do. So EuroCAD is a sell, but I'm not selling it just yet. So I'm waiting on a pullback. And that pullback could be substantial, could go right back to here. But I'll be looking for the usual, breaks of false breaks of resistance to go short again on EuroCAD. Euro dollar is exactly the same. In that, it has a game changer bar sitting there, and it is at a support level. So once again, too tough to just play the candle for me. Although if you're willing to get into drawdown, I'm not a fan of drawdown, I've got to say, but I can see if you would get in here, you're going to bounce at this point and you're going to go into drawdown. I don't think you'll lose the trade, but you probably go into massive drawdown, probably 2/3 of your risk before it goes in your direction. So that's why, and I'm not a fan of drawdown. So for that reason, I will wait on this one as well and get in the market if I can in this vicinity, you know, perhaps again as a false break of resistance, and get profit in the bank and make myself safe before we hit that level. So that's my MO, and it always is my MO. So there should be no surprise there. The trade line break could come here. Lovely little confluence with last month's monthly pivot. And I will point out that a lot of these pairs are going to be very, very similar. Because it's the first day of the month, you can see the pivots have descended on each other. In this case, they're all, throw a handkerchief over them, they're all there together. So we've got daily pivot, monthly pivot, weekly pivot all together. That is always something that I consider to be a magnet to price. And for that reason, I won't be trading away from that. Maybe a good entry point. We'll see what happens there. That's euro dollar. Pound US dollar is in a similar boat, but if slightly different chart pattern. If I go to the monthly chart here on pound US dollar, you can see that we're in a massive range. And when I say massive, I mean both time and price. Price is about 2,500 or 2,250 pips, and time is about 5 years. So I have no reason to think that this is going to change anytime soon. And for that reason, I'm thinking, okay, we're coming off the top. Ultimately, we're probably going to find our way down here to the bottom. Weekly chart. Weekly chart is telling me that we have, once again, a game changer bar. Those of you who are here for the first time and got no idea what I'm talking about, a game changer bar for me, actually, it doesn't look like a game changer bar there. That's interesting. I was analysing on a different broker, obviously, but this is not a game changer bar. Game changer bar has a high, higher than the previous, and closes on or near its low. That no longer qualifies for that, but it does look bearish, I've got to say. That said, we are coming off the top of that range, and for all the above reasons that I said before, I would be looking for a lower high in here. Okay, I don't have a game changer bar. I've misread that on another chart. And I'll be looking for maybe a weekly pivot / monthly pivot. No monthly pivots down here, or is it? Probably isn't. Yeah, monthly pivots here. We're bouncing off it. So this makes sense to me now. If we can get up to the weekly pivot, create that lower high situation, then we can look to trade it short pound US dollar. But it is not a game changer on this particular broker. Aussie Swissy. Now, here's where I get a little bit on the bearish side for the Aussie, and I'm not a fan of being in this for a long time if I do find a way in here short. But there are three what I call game changer plus scenarios. This is one. What I need to see when I get a game changer bar, if I want to trade that bar in particular, is I have to have perfect context, and the context has to be, where is this market headed on the monthly chart? And from what I'm seeing here, we are in a bit of a quandary where we're looking to bounce off the top side of this monthly trend line, or primary trend line, if you like. And that has only gone as far as this horizontal level. So I think we're trapped in here without a clear direction. And the two candles that I've got this particular week are game changer bar previous week, inside bar last week. Now, the inside bar, I must say, has got probably more readability in it than does this one in terms of strength. So it's tough for me to be saying, yes, it's going short here. But that, of course, has to be my bias, given the candle pattern that I love to trade. And it's just tough to say I'm an Aussie bear, because only this week am I an Aussie bear, and much is going to depend on what the RBA says tomorrow and what the Fed says on Wednesday / Thursday for most of us. So it is a little bit tough. I've got to go with what I believe in, and I believe in that candle pattern. So I have every right to trade that short under here put my stop loss probably above that high. I'm not going to do that. And the reason I'm not going to do that is not because I don't believe in it, but because I want to see what the RBA does tomorrow before I get into the market. So if the RBA fails to impress the market sufficiently to take out these highs and gives me a candle that looks something like that sitting up here, then I'd be more than willing to trade that short, given that I've been given the signal off the weekly candles. Exactly the same is going to be for Aussie yen, not surprisingly. Aussie Swissy and Aussie yen, very, very similar. My question mark here is, are we at the top of this range? And I think I asked this question last week, and the answer so far was no. And I don't have anything to trade here just yet. But again, I've got a game changer bar the previous week, and I've got an inside bar that has followed it up. The problem with that inside bar, exactly the same as Aussie Swissy, is it is very, very large in body. If it was smaller in body, I think I'd be more than willing to trade that bar in particular. But just like I said on Aussie Swissy, I think I need to see more information here. It looks likely that we're going to break out and take on this high. If that's the case, and then we come back underneath that level, retest the confluence area of pivots, trend line, perfect. Rejection bar there. I think there's a big, big space underneath this. I can't see it from a fundamental point of view, but I'm not a fundamental trader. So if this does set up, I will be trading Aussie yen short, albeit perhaps at reduced risk. Now, we also have the same scenario on Kiwi Swissy. Again, not surprisingly, Kiwi and Aussie tend to track each other fairly well. And we have a game changer bar here. We have an inside bar here. Again, we've got an issue because we're bang on that resistance trend line, which does make it a little bit confusing because we've got to close above it. So I've got to wait again, perhaps for a false break of resistance. If I am to trade this, I won't be just trading the bar as it is. But these things don't necessarily have to be traded. You just have to, okay, the market's telling me that I've got a reversal bar here and I've got an inside bar here. If it's going with the market in terms of primary trends, I can't pick that here, I've got to say, then you've got to take a notice of that. And by the end of the week, I would expect the market to be down here at the very least. But I don't want to trade that bar, I want to wait. So it's waiting on pretty much all of these things until give me a false break of resistance, then I can trade them short. I've run over time. George, I'm so sorry, mate.
Jeff, do not apologize. I always get inside buddy when you are talking, so it's helping me more.
Awesome. And I think I was talking to you about those bars last week, was I not?
Yes, we were. So that's quite fascinating to see how they've turned out.
Have you managed to have a look at them yet?
I haven't, mate, and I'll tell you why. Because what I do when I start to get towards the end of the year, I know that different forces start to come into the market, monthly forces. I mean, you trade off the month, so you understand that, as well as the levels of resistance and support out of last year's ranges and what's happened this year start to come into play. So what I've prepared, if that's okay with you, just to share on the 7 markets that I trade.
Totally.
What those forces are. Just that,
welcome, George, by the way. Sorry, mate. I'm just in the room with you for the first time. So welcome aboard, buddy.
Yes, Ash. You know, I kept thinking that if you had come on earlier, Jeff and I wouldn't have been so confused with the hours. I mean, both of us are just clueless. Time zone +1, -2. Where are you? Yeah.
George, don't tell anybody. There's not that many people watching, but you and I are pretty easily confused, I've got to say, right?
Hey, but good to see you, Ash. How you doing, mate?
I'm very good, buddy. Very, very good.
Have you guys met in the flesh yet?
Yeah.
Right.
In Bali, first year, I think.
Bali
of course.
And I think Singapore was one of them, right?
Yeah, we would have seen each other in Singapore.
Yeah. I was just saying to Jeff, and your timing just confirms exactly what I'm saying. That towards the end of the year, the big boys come out to play. You know, monthly bulls and
Yeah.
yearly, and so that's why you're out here. Ash, because you trade off the yearly, right, and the kind of monthly chart. So this is your.
Oh no, I mean I kind of look at everything, but really I try and trade the Open, just the UK Open, first sort of 10-15 minutes. I like to get in and out.
And that's
but
it.
at the end of the day, George, exactly what you're saying is right, because Ash trades seasonality as well. That's part of his
okay.
toolkit. So that's very much in line with monthly charts. Totally.
Can I just quickly show what I have on my charts?
Oh yes, you're here for a reason, right?
So here are the 7 markets that I trade, and I like to think that they're a fair representation of what's happening with the global financial charts, global financial markets. So while I'm sitting here in Johannesburg, I can trade the whole world, right? Essentially. So that's the only logic behind these charts, right? The selection of these charts. So let's just start off by looking at the Nikkei 225. So what I'm going to go through is pretty quick, but the lines that I'm now leaving on my charts, when I go down to the daily time frame to see how exactly how you're taking guys through, Jeff. So I look at you look at your weekly, daily. I look at the daily setup. If I see something tradable, if I was trading the day, then I go on to the 5 minute and I look for my setups and I pick it up from there. But these levels of support and resistance now remain on my charts. They might clutter them a bit, but as we get into November and December, these forces are coming into play. So on the just the Nikkei 225, so I've got the low of last year marked here, high of last year. So this 50% pullback of last year's trading range is not going to play much now because we kind of way out of that. But we broke above the high of last year, so we have the high of this year. All-time high on my charts. That's what I see as highest level of resistance, low of 2021. Now that 50% level is key for me, the 50% of this year's trading range. So I'm going to leave that there because the market can be pulled down by that magnet. So I don't want to be surprised and wonder what's happening on the daily if I don't have that marked. So that's a key level for me. And if you look to the left, you just seen, trading range price action throughout the year. So it won't surprise me if we come back to that. Both forces, bulls and bears, want to close it beneath this or above that. So I'm going to leave that in there for the Nikkei 225. That's key for me. Hong Kong, Hang Seng 50. Again, so same kind of thinking just to help us to move through it pretty fast. Low of 2020, high of 2020. Now look, 50% of last year's trading range. That's where the market is playing. So that's big forces here that you can't ignore when you start going down into the lower time frames. So you've got to see that when you're trading and not get rather optimize, make money out of it. Then all of a sudden, hey, what's happening? Why are we being pulled out here and there? High of the year, low of the year, 50% pullback for the year. Now, if anyone's able to break out of that, and on the monthly time frame, we are in breakout mode, the way I look at it, inside candle. If the bulls are able to break out of that, we want to break out of this descending pattern here, and that's going to be the key test for the year. We don't have much time, so there could be very, very strong forces. But I think the midpoint of last year is key. Why would that be key? Because the market then just demonstrates indecision if we end up here going into next year. So keep an eye.
That's really interesting, mate. Because actually, both those levels, certainly that where we are now is actually a pretty strong horizontal level as well, isn't it?
Yes, it is. It is. That 50% is range of last
But
year.
then you look at the January, May, sort of September area there. It was resistance at that point. It was support on September the 1st, 2018. So actually quite a strong line.
If you go all the way back, yeah, it's a good point. So to pull out of that, whoever is able to pull out of that, I mean, we need to see strength. Whether it's bears need to break beneath the low of the year. There'll be pullbacks and tests, but if they're able to do that, that's away from that, then we know we'll have lower prices. As far as the bulls are concerned, they're saying, hang on, everyone can see that. So we need strength out of that, whether we test it and then carry on and give us new prices. So that's going to be a determining factor to make money, or if we're blind to lose money. So hopefully, let's look at it as we go along. Brent crude. Okay, so same kind of thinking again. High of last year. So your thick blues is high of last year or low of last year, and lowest price on my time frame, 50% way above that. High of the year. Okay, that's very interesting. If you look at the double top that's been created by 2018 here, but the high of the year, low of the year, 50% pullback. So we have almost like a bit of a double magnet here, if you like. So very strong forces, 50% for of the year and the high of last year. Now, why would that be important? Because of this double top trading range price action, I would expect that we get a pullback from there. If the bears are strong, well, they're going to say, fantastic, double top, come out of there, come back, lower high, and let's go all the way down. But what will pull them down is these forces here. The bulls will say, well, okay, fantastic. If the bulls are strong, they want to break above that double top. And if they do that and come back and test, I mean, prices, the measured move of that can just go on quite a bit to the 130 levels, etc. So don't ignore that double top. Even if you get a breakout above that, you got to be careful that there's still enough forces in the market to pull us down to test these levels. Whether we create a lower high, that's if it's coming off the double top, fantastic, we look to go short. Or if the bulls are strong to give us a breakout above that, they're going to come back and test that level. But I think that's an interesting pattern. Now, the reason I show this, well, it gives us the forces to worry about going into the end of the year. Remember always that you know the patterns that you see are fractal. Whatever you see at this time frame, you will see that on the 5-minute, 15-minute, hourly. So the same kind of thinking you gotta keep bearing in mind. I love this because I know this really is fantastic. You know, it's a breakout mode of some sort. And if this had turned up on the 5-minute time frame, for example, then I'll be saying fantastic. Let me see if off the double top I get a lower high. If I do, I'm going to trade it down here. Okay. If the bulls are strong enough, well, let's see if we get a breakout and follow through candle. Always must be follow through, pull back. Then I'm expecting a measured move of that distance, and you can take trades and hold it. See, is that a question? Sorry, what is, my apologies, guys. I probably rushed through this. UK oil, Brent crude oil. That's the current time frame in the current chart. So
yeah, big discussions about that, aren't there, George, on oil? Just as you say, I mean, that is fascinating where we are, you know, the fact that we are basically back to those 2018 highs, and we've rejected it once. But we were saying, you know, that what's going to be the fundamental driver to take us down? We have a technical reason to say there's a chance for this to go short, and probably the chance is in the favor of the short. It's been on balance. But what's the technical reason? Sorry, what's the fundamental reason? And I guess they just haven't emerged yet. And whether we float around here for a while waiting for that is another sort of aspect of that, I think.
Yeah, because I mean, your fundamentals actually drive the price in the long term, don't they?
Yeah.
So that's a fascinating point. I mean, when you're trading, if you're able to process both the fundamentals and the technicals, you have a fair advantage. If you only trade price action like I do, then you know I can't process the fundamentals. Just the way
yeah. Well, do you know what? I don't, in some respects, I'm not sure whether whether it matters or not, because actually the fundamentals will be expressed through the chart patterns. So as long as your chart pattern strategy is tight and tested, then the fundamentals I don't think play such a huge part as they need to. I look at them, but I know, Jeff, you know, I know you look at them a bit now, mate, but they don't really play a huge part in what you do they?
They'll keep me out of the market, mate, rather than affect me in any other way. If I get a fundamental scenario that says, "Oh, danger warning, this could be, a real game changer," and it's against my bias, against my technical view, then it does influence me. It will keep me out of the market. But
right, I mean, I wonder whether with something like oil, both the UK and the US are talking about interest rate rises. If that was to happen, then we get a stronger currency, which, on the other side of the coin means that you pay less dollars or pounds for that oil, which means that the balance might come into play there as well. So it's possible that these announcements that we're getting on Wednesday and subsequently could actually drive all the markets down a little bit, depending on what's said.
Yeah, I think the wonderful thing about this chart is something that George and I really sweat on. When you've got a clear potential double top here at a significant level, we're waiting for one of two things to happen. We're waiting for it to break out and come back, or we're waiting for it to present us with a lower high. And once we get that, then we don't need to worry about too much else, because we know we've got a direction to trade in. And I think that's irrelevant what's going on around it, frankly. Well, it's probably not, because if the fundamentals were to drive this through that double top, or make the double top fail, let's go through that horizontal level, then it pulls back to that level, or even underneath that level, that's a really strong indicator that the fundamentals aren't strong enough to drive the market higher. And therefore, you know my answer to the rest. If it ain't going that way, it's generally going to go that way.
Yeah, agreed. I might be having a call with Paul in a couple of minutes. He's just texted me saying he's coming in. So if I have to hop out, just to say thank you, George, for today, and I'll see you next week. I'm going to stick around until he does call.
No problem at all. Just on fundamentals, as you move away from this, the whole time that I keep track of fundamentals, I always have my news charts ready, and whenever I see red news, I'm out, because in that moment of announcement, price action kind of goes awry. So I just wait, give it off the 5-minute, wait for 2-3 candles, wait to settle, then things become clear again. So I do keep aware of it just to stay out of the market.
Yeah, okay. That makes complete sense, doesn't it? Because that's where we don't know what's the announcement going to be. So if the market's confused and it expresses it through confusion, we can just get run over at those points. So I think that's almost enough to know about fundamentals, that there's an announcement coming.
Yeah. And I have tried many times to find a way to read price action pre the announcement and see if you can jump in. It's really at the end, I'm convinced myself it's a gamble. I don't want to gamble.
No. And it comes to the point you say, actually, I don't need to. I've got something else that is tight. Let's stick with this.
Yes, yeah.
If it wasn't for the spreads, there are ways to trade news, but the spreads kill you. They just kill you.
Yeah. UK 100, FTSE 100. Now, here's what's interesting. We've just broken above the top of this trading range here. But every time you have a break above the trading range, you expect it to fail. And also, you've got to ask yourself questions. Hang on a second. The bulls are strong. They should have given us a much bigger candle. Okay.
Yeah. I'd agree with that.
So at this stage, I'm thinking, well, always false breakout. So even if I was trading this kind of chart anyway, there's no way I'm going to be buying above here. I'm actually going to be looking to see if this breakout fails and comes back. If it does, that level becomes important, 50% of the current year's range so far. So that's the current year's high, current year's low, so it's 50% pullback. So even if we do get a follow through here, I'm expecting failure on this. Then I'll just follow the same logic going all the way down until I find what I can trade on the lower time frame.
I'm with you on that, mate. And I think the same with the S&P and the NASDAQ. You know, both of them had candles that broke above their previous month, on the price action, but not significantly, and not all that. The bulls weren't, they're not so in control that you'd expect.
Yeah.
A huge follow through at this stage. And the NASDAQ is, always difficult to trade short, so I wouldn't touch that one. But it does look like it might be getting a little bit overcooked.
Yeah. So I mean, there you go on your US 500 again. The same kind of thing. That's my all-time high here. It's almost out of the year. But if you just have a look at that, strong, bullish price action, all that is, in my view, is at some point there has to be profit taking. Of course, it does want to make it there, but it's profit taking. Then we have an outside candle month. Now, outside candle month of a micro double top, for me, that's top of a trading range. So if I'm looking at that, I'm not going to jump in and buy into that. I'm now waiting to see if the bulls are strong, will give us follow through. But it's top of a trading range. So I'm expecting failure. Cool.
See you next week. I'll see you Thursday, guys.
See you Thursday, mate.
So that for me is an area where I'm expecting a failed breakout, because outside candle, what does a failed breakout mean? There could be a bit more bullish price action, but I'm not expecting this same continuation. There has to be a bit more correction. Whether we come back and test the top of that and carry on, fantastic. So I'll be looking for shorts if this was my time chart on the 5-minute time frame. But in terms of key levels to watch out for, of course, you got the high that's ever going up, but that 50% pullback, if we get correction, looks a way off. So we might not get there before end of this year. So the only real force that's, if you were to put it, I'm just going to put it on for now, take it out. The top of that little trading range there, that's the only real force on lower time frames to be looking at on the US 500. I think very quickly, gold. Gold is interesting. They're all interesting, right? There's a all-time high of 2020, low of 2020, 50% pullback. I mean, you can see that's where the market is hanging around. That's a really powerful force. 50% of that trading range of last year. Look at the high of this year. Look at the low of this year, 50%. So we are in this zone where there is resistance and support. And the year might end up in there. But if you ever look to the left, inside candle last month, inside this candle, doji candle. So breakout mode. But what does breakout mode mean? It means whoever has the strength right now would need to give us a candle above that and follow through. So it's not just above these heights, it's 50% of the year. It's not just these lows here. It's a bit of a triangle forming up, but it's this 50% pullback. So expect a lot of dramatic price action, but we've got to get direction. This is an inside year, and we really just trek into breakout mode. And lastly, Jeff, sorry, a couple more minutes, euro.
No problem, George.
Of the euro. So again, same kind of thinking. What forces are controlling the market? Well, presently we've got the low of this year. We tried to break. We did break out beneath this, but if the bears were strong last month, they should have just given us a new low of the year and broken through this 50% level. Okay, so this 50% level of support is very, very key for euro to give us a new low, but it will then challenge the midpoint of last year. High of this year, black line, low of this year, midpoint. So we will below the midpoint of the year. It's bearish market coming out of the double top. So the bears would really want to create a new low, but closing beneath the low, that 1.147 level kind of last year. Why is that significant for the bears? Well, if you look back, remember this, just call it the COVID month. I don't know what you guys call it, March of last year, that indecision trading when the whole world was in confusion. If the bears close beneath this, they're saying, well, okay, bear trend, we know we had issues here, lower high, let's continue, more selling carrying on. But of course, the bulls that created the breakout above that, they want to defend that. So interesting price action coming up, but the key levels to take down to your lower time frames is this 50% level on the euro. Jeff, mate, that's just kind of, I thought I'll just share this, as we go through.
No, awesome, mate.
Drop it down into weekly and dailies and look for opportunities.
We always have this thought process on currencies that we always need to be looking at trading reversion to the mean, which is pretty much what you're on about here. But I'd not considered that was even a thing with with the indexes, commodities, stock markets, gold, oil, and it all seems to come together. Interesting.
Yes, it definitely does. I mean, those forces come together. So I think it just gives us more opportunities, to find ways to get into the market. And it's the same thinking, lower time frames. We've got to use the same thinking. Yeah.
Yep, totally. Mate, I'm going to share exactly the same screen as you've got there and show you. I called this 6 months ago, and I won't say foolishly because there was a reason why I didn't trade it. You're talking about false breaks, right? And this is how I play false breaks. There's two ways to play false breaks for me. One is a single candle false break, and the other is at least a 4-candle false break. This is both. So here's the range that we were in prior to the breakout. Now, once you see that breakout, there's, in my mind, only two things can happen here. Take out the sideways bit. There's only two things can happen here. One is the bulls are completely in control here, and they're going to take on this high at the very least, or they're going to go beyond. The other is, if they're wrong, if the bulls are not strong enough to take complete control here, then they're going to be wrong at the breakout level.
Right.
So that's where their stops are. They're long, their sell orders here, without question. And that's exactly what happened. You get here and you get a strong bear bar. Then you get a retest of that level. And this is the second setup. So the first setup is just trade the breakout bar, trade underneath it, put your stop above it. Obviously take profit somewhere. There'll be a level there somewhere where you take profit and get safe in the market. This is the way I trade. And then you get a breakout, consolidation, re-entry underneath the trend line, and then you get the retest. And that's the bar you trade. You trade underneath that bar. You put your stop loss anywhere. Pardon me. I know the way you trade, you would put your stop loss there. I would probably trade the candle, right?
Okay.
So that's what I called 6 months ago, and I didn't take the trade. And the reason I didn't take the trade is because I was already short on the monthly chart Euro CAD. And I can't remember if I was safe. I would have been safe probably, so I could have taken that trade. But now you would need to have taken profit and be in a safe position. But the really interesting part about that and what you've just presented to us is we all know that the majority of breakouts fail.
Yeah.
So what we need to do is focus on that and work out a way to actually make money out of false breaks or failed breakouts. And you and I both have a similar scenario where we look to trade a lower high off a resistance level. But once it's broken and we're looking for that false break, the same can apply. You can look for the lower high. You can trade underneath the breakout bar, or you can trade it the way I do here and wait for it to come back under and be retested. So there are ways to do it. And I think if you can master those ways or find your own ways to do it, I think you'd be far, far better off than you will be trying to trade breakouts. The false break is my favorite trade without exception. And the reason is most of them are false. It just makes sense to me.
Yeah.
It's logic, right?
It's logic, and I fully agree with you. And I think that's the key. once you accept the reality that most breakouts fail, already your probabilities are in your favor. I always then think, okay, so 60% of the times, if I can execute your trade, I'm going to make money. It's more if you follow the logic and the reasoning, you got a higher probability, but 60% is fine. Then, of course, then I just got to look for those areas where there's likely to be false breakout, to find a way to get in. You make a lot more money than to convince yourself that you can trade breakouts,
It's actually why we're here, isn't it? To make money.
Yeah.
At the end of the day, mate, we've held you back for overtime. Checks in the mail, but let me give you a heads up as to when you can find George. It's on Wednesday. Now, George, the time. I'll leave that with you, right?
My God. Okay, let's give a go at the time. Now, I like to think, and the confusion I think comes between GMT and London time and all of those time-saving things. So let's just think of GMT as our marker. So GMT 9:30 on Wednesday. That's it for our live trading profits. We'll see you there.
which now, thank goodness, is exactly the same time as London.
Yes.
Whereas last week it was not, but now it is.
So, guys, exactly that. 9:30. Perfect time, London time. We can do that. Remind me when it changes, Jeff, so that I can start get confused for a day and then we start again.
Totally. All right, mate. Thanks so much. We'll look forward to catching up
Appreciate
next
it.
Monday. And those of you who can catch George on Wednesdays at 9:30 GMT, and you can get far more insight into trading those breakouts or false breakouts as they occur. Thanks, mate. See you next week.
Thanks. Appreciate it. Okay, take care. Bye-bye.
Okay, I think I am sharing euro dollar chart. This time I've gone to the 30-minute chart, and this kind of is exactly what we look for when it sets up. It's not there yet. And what I'm really now looking for is exactly as I just described, a false break of support to trade this to this area here, the magnet in price, right? This is undeniable in my mindset. I have to look for a trade towards that area. Too late to trade it from here, of course, and there was no setup there that I could trade. But if we come back to here, and everybody will be thinking, okay, we're going short again, and I get that works. But if we then come back above this line and retest it, wow, that's where I want to be. I want to be trading to that level, to those pivots. And I think that would be a very, very nice trade for you to consider on euro US dollar. Okay, looking at the chats. Yes, indeed. Yeah, I'll agree with that too, Lewis. I'm not a fan of going long the euro dollar at all. Yes, it was last week, wasn't it? Very, very similar. Very, very similar scenario. If you can find a trade to the daily and weekly pivot, get out and look for it going in the opposite direction. Perfect advice. Love it. Righto, guys, that is this Monday all wrapped up for the first day of November. And lots of news coming up this week. Be careful trading into them, but I think if you can work out a directional bias prior to them, and the news actually gives you a better entry than you were perhaps anticipating, that may well be the way to go. See how we go. We'll catch up on Thursday when, of course, it will be quiz day. And there'll be a whole lot to talk about by the time that happens. Have a wonderful, wonderful week ahead. Angel, thank you for letting me in the room earlier, and we'll catch up when next we see you. Have a good one, guys. Bye-bye for now.